Hi, good afternoon, everybody. I hope you can hear me. My name's Tim Webster. I'm one of the senior associates at BTO Solicitors, and I work in the personal injury team closely alongside the clinical negligence team and also the health and safety and regulatory team. Thanks very much for attending this BTO webinar on judicial expenses. I'm delighted to say that we have a guest speaker, Deborah Shannon, who's the director of DCS Law Accountants Ltd. And Deborah has over 15 years of experience in legal accountancy across all law firms and international practices. Deborah is a recognised expert in the adjustment of complex accounts, including additional fees and appearing at taxations. Since founding DCS Law Accountants Limited in 2020, she has been providing specialist support to agents on all cost-related matters across both the Court of Session and the Sheriff Courts across Scotland. Her approach and deep procedural knowledge make her a trusted advisor in cost assessments. Before I hand over to Deborah, just if you have any questions, if everybody has any points that they wish to raise, please either type it in the Q&A or raise a hand at the end, and we'll make an effort. Deborah's agreed to answer any questions there if she can. If not, we can take the question away and then get back to you with a more detailed answer. But thank you very much again for attending, and I'll hand over to Deborah just now.
Thanks very much, Tim. I'll just share my screen. Everybody can see that.
Yes, that's great.
Yes, good. Okay, thanks very much. Thanks for coming, everybody. As Tim mentioned, my name's Debbie Shannon, and he's more or less done my job in this slide here. Just in addition to what Tim says, I am also a member of the Society of Law Accountants in Scotland, SOLAS, qualified SOLAS member as well, and also I'm a member of the Association of Independent Law Accountants in Scotland as well. So moving on, let's have a look at what we're going to cover today. So I'm going to look at expenses recovery and what inroads we can make into adjustment of accounts, and also where limitations are and what we can adjust, or what we can't get off accounts rather. We're going to look at the basis for taxation, procedural timelines, factors to consider before proceeding to taxation. We'll look at the practical cost considerations and running diets of taxation, and also any recent trends and issues that we are coming across that we think would be useful. So first of all, we will discuss where we can make inroads and where we can't. So I've listed some typical areas of abatements here, and I'll quickly run through each of them in terms of what we look to abate and what we think we can abate and what we can't. So the first one, we're looking at the pre-litigation fee. So if it's an aspect or a Sheriff Court action or account, and the claim is valued and raised for an amount in excess of the CPAP limit of £25,000, then that's a question that you need to check to make sure whether they've charged CPAP pre-litigation fee or not. If it is above £25,000, then we would challenge that and restrict back to the normal block fee of £720. A lot of times we're seeing in accounts where actions have maybe been raised for like 30,000, 40,000, 50,000, and they are claiming CPAP expenses. However, our argument is that the claim has been valued pre-litigation higher than the CPAP limit, therefore it can't possibly be governed by CPAP at that point, and should fall out of the CPAP regime. So that means that basically they won't be able to charge the higher CPAP fee, which they charge sometimes up to £25,000 limit. So that's one that we would look to restrict. Another thing for pre-litigation fee to look at is round about what work's included there. So is there like GP records considered, hospital records, physio assessment reports? None of those are recoverable pre-litigation. Also, from the file that is available to yourself, you have a look at how much work was done by the solicitor from either side to warrant the full fee. If it's not governed by CPAP. If there's not a lot of work, then I would be looking to restrict the pre-litigation fee back. Specification of documents, we look at how many are lodged. Are they all required? Could the maybe second or third specification of documents, could that documentation have been requested earlier? And if so, then we would be looking to abate the fee for the specification of documents. We also would be thinking about the number of havers that there's optional procedure charged for. So as there are 5 havers in the specification of documents, but you might have 6 optional procedures charged for, it's just worthwhile checking because that can sometimes be wrong. We also look at checking the recovered documentation under the specification of documents. A lot of the time you find that there's GP reports, and it tends to be full sets of GP reports that are recovered again. And bearing in mind they've already been considered probably pre-litigation in most cases, then that falls within the pre-litigation fee, so that it would be duplication of work. So you would be looking to restrict that charge back as well. Inventory productions, again, this is an area that you would look at in terms of how closely inventory productions were lodged. If they're a week apart, then why was it necessary to lodge 2 when 1 would have sufficed? And that's normally a point that we're quite successful on, even in adjustments and also in taxations. Also have a look at what documents are included. Could they have been lodged with the previous inventory productions? Not an argument I would take to taxation. It is one that I would use when negotiating an account, but ultimately the auditor would be of the view that it's really up to it's the agent's prerogatives as to when they lodge a document, and I've not been successful on that point at taxation. So it is, however, I have been successful in just adjustments, and negotiations. So I have managed to get something off, but I try not to use that point if I'm going down the taxation route. Statement of valuations of claim. If we're looking at a court of session personal injury case, we really want to restrict this in line with the sheriff court fees, which is £270. I think it's £540 that's charged in the court of session PI case, given that there's counsel's involvement. So in an aspect case, for example, normally there would be counsel involvement, or if there's not, it would be a higher fee that's charged, but when there is counsel involvement, it's a lower fee. So we would be really looking to bring that in line in court of session PI cases as well. Expert reports and charges. So what we want to do here is check the sheetage of the reports. Now, at the moment, I have a couple of outstanding taxation or accounts at taxation where I have argued this point in terms of what is recoverable in an expert's report. So more and more I'm seeing pushback from pursuers agents in terms of the full report is recoverable. We maintain that the front cover, index page, instructions, expert CV and details and appendices are not recoverable. There's also an argument to be made that considering extracts taken from medical records and included in an expert's report is also duplication, and we tend to take that argument as well. I'm not sure what the auditor's view is in terms of what he is allowing at taxations, because I've got so many tax accounts that are sitting outstanding at the moment that it's difficult to ascertain exactly what his current position is. However, that is our stance. We try to restrict that information. I did have a taxation where I had taken this point and was challenged on the CVs, the expert's CV being recoverable. But my argument here is, well, the pursuers agents instructed the expert, so surely they would have considered their CV prior to it being included in a report to then be considered again. So, you know, there is arguments there, and that's our position, and that's what we maintain at the moment. In respect of outlays, again, you're going to be looking at the experts' outlays and their fee for the work that they've carried out, and you'll be thinking whether that's reasonable, is it high, and I would be asking for a breakdown of the hourly rate and the time spent. Seeing more and more invoices coming through from experts that are just a set fee. There is no substance to the invoice, there's no detail. So in most cases I would go back and ask for further details there. And I have had pushback there as well, in terms of, if you're not objecting to it, then, you know, do you really have to request all this information? But ultimately my position is that the information should be there in the first place if the defender's paying for this. So yeah, there's definitely, it's definitely worth having a look to see whether they are reasonable. Looking at adjustment fees, record fee, again, if there's only one party that's adjusting, then you're looking to restrict that. If adjustments are minimal, I would again be looking to restrict that. Even if both parties have adjusted, I would still be looking to take something off there. Hearing limitation fee, this is a fee that I'm seeing more and more in accounts, just thrown in willy-nilly, multiple hearing limitation fees being charged. Only one's warranted unless the total doesn't exceed the full hearing limitation fee itself. So you would be looking to restrict those charges as well. Settlement fees, again, seeing more and more of those included in accounts. I would just say that, you know, you really want to ensure that the work done to warrant the settlement fee is justified. If there's been one offer made and considered, then I wouldn't be allowing a full settlement fee for that. I'd be restricting that back to about £100. Also noticed settlement fees being included very close to the extrajudicial settlement. And again, my argument there would be that this all forms part of the extrajudicial settlement fee, and I'd be looking to strip out any settlement fees that are linked in with the overall negotiations to settle the action. Recognitions, again, this seems to be an easy way for the account of expenses to be increased, if you like. I think it's difficult because from a defender's perspective, in most cases we are in effect blind to the content of the recognitions, and in most cases we have to guess what's reasonable and take a view on that. A lot of the time it's down to, as I say, each case stands on its own merits, and it's down to looking at exactly what work has went on, you know, the injuries, the position in relation to you know, has liability been omitted, has it not? So you have to take an overall view in terms of recognitions, but some pursuers agents are just yeah, really pushing the limit of the recognitions. I actually had a recent taxation where I took that point to, and I'll cover it off later on, but it is definitely worth restricting your recognitions back to try and at least get something off the account, or limit them, because, you know, some of them are really unreasonable that we're seeing charged in current accounts. Incidental procedure fee, if there's not a note in the line of evidence, then I would be restricting that. Now, it seems more and more since the 2019 rules came into place and there was a change in wording that the incidental procedure, the note in the line of evidence seems to be prepared in every case now, whereas prior to 2019, I would say it was really quite rare to come across a note on the line of evidence being charged in a straightforward action. So I always try and challenge that, and if there's nothing, or if they have included it in, I do ask if it's been actually drafted and not just prepared, because I've had some examples where it's been prepared but not actually drafted, so we've managed to get something off there. Extrajudicial settlement fee, again, did the case settle at the PTM? If it's settled at the PTM and there was counsel involved, then you're looking to restrict that due to counsel's involvements in the negotiations. And counsel's fees, finally, over-reliance, overstated. You really have to consider what you deem it to be reasonable. And again, it's looking at the case, it's looking at what work was done, and if in doubt, then I would restrict the fee. And consideration should be given to the specific entries, obviously, in the account. Okay. So moving on to the next slide, it's just the basis of taxation. So this is the general principles which replaced the old general regulations on the 29th of April 2019. The old general regulations stated expenses to be charged against the opposite party should be limited to proper expenses of process. And they removed that phrase and they replaced it with what's on the slide just now. And it is really just the test is reasonable here for conducting the proceedings in a proper manner. Something that's been a fault of the pursuers agent, the paying party, then the entitled party, then it's a result of fault or error. Unsuccessful, then it can be taken out, or the expenses will be refused. But one thing I have noticed is that because of the change in wording, I've had a few law accountants claiming for entries and accounts where the work has been allegedly carried out, but preparing the document, the work's been carried out preparing the document, but the document's never been lodged nor intimated. In those cases, I have abated. So if there's something in your account and you've not actually received that, or it's not been lodged in process, then my view is that that's not a reasonable expense, and I think they're trying to get around it because of the change in wording here. So if you see anything like that, then I would suggest that you abate it in the first instance. Now moving on to the timelines for taxations. So this is just a wee graph here saying what stage and the deadline. So we've got the account lodgement. We need to lodge the account. As I'm quite sure most people will know that it's 4 months after the final interlocutor, or within 4 months, and the deadline is 4 months. Intimation of the diet. This is done by the auditor, minimum of 21 days notice. Now, I don't know if you've noticed, but the aspect / Sheriff Appeal Court / Court of Session Auditor now asks that the receiving party also intimate the diet on the paying party. Now, this is because there's been a few errors, I believe, in intimating from the auditor's office. So now they're asking that the receiving party also intimate this on the paying party. So you might find that you're seeing that happen more and more. Lodging points of objection by 4 PM, 15 days before the date of taxation. Causes more work for us because we're having to lodge points well in advance of the taxation. However, on the plus side, I have seen more cases settling as a result of the points being received early. So at the moment, I would say it's probably more positive than negative. Responding to objections, again, there is no deadline for responding to objections. There is no rule per se around that. You can choose to respond or not, but the court encourage, or the auditor encourages a response to be lodged and intimated in advance of the taxation, and I think they say around about 7 days in advance, but it's a hit or a miss whether that happens or not. And final hearing, again, this is the date of taxation. It'll be fixed typically 6 to 12 weeks after. However, we are currently seeing timescales of up to 4 months for a date of taxation to be heard, and then up to 9 months to receive the tax account. So at the moment, there is lengthy delays here, which can be used a strategy to try and negotiate agreement of accounts. However, I'll move on to that later on in terms of some of the things we've seen pursuers agents doing to mitigate that. Down at the bottom, I've also got a wee note of in terms of taxation cancellation fees, and this is just the sliding scale to be aware of, that the audit fee, which I'll discuss later on, this is what is charged if you don't cancel your taxation in time. So if it's not cancelled 4 days before 4 days before the taxation date, you are going to get charged, if it's agreed, or cancelled 3 days before, you're looking at 50% of the taxation dues, the audit fee. 2 days before, it's again 50%, and if you cancel the taxation on the day before or the day of the diet, then you're looking at 75%. Okay. So taxation factors to consider. So these are the factors that we would look at before deciding to proceed to taxation. And this is really due to costs involved for a paying party. So you're going to be looking at the prospects. We need to take a view on the objections that we're making and whether we're likely to be successful before proceeding. Going to taxation regularly and understanding in relation to your adjustments, your negotiations, what the other side are allowing, what they're not, allows you to take a view here on what you think the account would tax at, and you need to do that first. Economic, again, there's costs of proceeding to taxation. The Court of Session Aspect Auditor, he charges the taxation fee at 6% of the account as taxed. So if you manage to get something off that account, then the audit fee will be based on that. So it'll be 6% plus £1 of that amount. Now, the Sheriff Court auditors don't do that. They tax on the 6% of the account as intimated. So if you lodge your account and it is £50,000, they're going to charge you charge the vendor an audit fee of 6% plus £1 on that amount. In terms of economic decisions, for an example, so account claimed at 40,000, say, you would have fee fund dues, which is taxation fee, auditor fee dues of £2,401. So that automatically increases the client exposure to £42,401. If, for example, during negotiations, the other side's bottom line was, say, 37,000. Say we were looking to agree at 36, and that was our kind of top line, and we're about £1,000 apart. We then take a view then on the estimated figure the account would tax at, and in this scenario, say it was going to tax at 38,000 inclusive of the taxation fee. So we've already added on what it would cost to go to taxation for the taxation dues. In this case, it would be more cost effective to proceed to taxation, obviously, with accepting the offer of 37,000. If we're not going to beat that at taxation, there's no point, because in addition to the taxation costs or the taxation fee, you've then got the costs of preparing, you've then got the costs of attendance, and it's just it doesn't become economic at that point. And finally, the testing point is, do we want to take a point to taxation? Do we want to understand what the auditor's position is on this? That's really the final point. Precognitions is one that I think that sometimes you do have to just take an account to taxation to see what exactly the auditor will do, and this gives us intel into his thinking, and it helps us to obviously make informed decisions when we're adjusting accounts in the future. So what we're seeing at Taxations, we are seeing recognition sheetage being restricted. I recently had a tax account back and I've taken on a recognition point. It was quite a small account, but the pursuer presented an account and it had 24 sheets of recognitions. It was for a road traffic accident. The action was raised for 10,000 in aspect. It settled for 3,250. If I remember rightly, I'm sure it was restricted to summary cause expenses because of the level in which it settled at. There was, as I say, 24 sheets of recognition, which was quite a small account. The auditor taxed off 15 sheets of the recognitions out of 24. So taking this point to taxation and then, you know, seeing what the auditor's position was useful for going forward. He doesn't seem shy. This was obviously aspect and that auditor, but he doesn't seem shy in restricting recognitions. And if I remember rightly in that one, in my points of objection, I objected to every single recognition in the account and asked the auditor to consider it. And it was actually Alec Quinn and Partners on the other side, and they objected to my objections, saying they weren't specific. But my argument was they can't be specific when I don't know what's in the recognitions. And we also argued the point that, as I said before, we're blind to the recognitions. It's only reasonable that we ask the auditor to consider on our behalf. And he agreed with me. So by all means, if you're going to taxation and you have on maybe other points, then I would be asking for the auditor to look at every recognition as well.
Deborah, do you mind if I interject here just for a second? I appreciate I don't want to put you off your flow, but I think
no, it's fine.
Sorry, this is Stephen Bryceland, BTO.
Aye.
This is recognitions is really one of our biggest challenges when we're thinking about accounts, and I wondered if you had any advice, because as you say, we do get stonewalled quite a lot. We don't have the right to see or demand to see the recognitions that they're being charged for. Obviously we are entitled to ask for you know, a summary of what is contained in the recognition, and we can take a view about what perhaps a witness ought to be getting asked about. But in circumstances where, you know, maybe the primary victim who's making the claim, the pursuer themselves is recognised to the tune of 12 pages, and somebody who's perhaps only speaking about the care that they've provided to them is being charged at 11 pages. You know, is there any tactical or strategic advice that you can give about, you know, doing anything to try and say that is clearly unreasonable, because that witness can't be expected to be giving as much evidence as the actual pursuer themselves? You know, is there any way we can kind of try and crack that nut?
We kind of approach the recognition position with a view that for services recognitions, for example, I would say 4 sheets would be reasonable. I would say for witness recognitions, now I'm probably being quite harsh here, depending on the what type of action it is. If it's you know, a kind of straightforward one, but there is witness recognitions, I look to restrict those to about 2 sheets. And I'm aware that this can be way off the mark compared to where the pursuers law accountants are, or the agents are, but it's really difficult when we don't know what's included, and it's fair enough them giving us a summary of what's in the recognition, but from the summary we can't tell if, you know, if that's reasonable, because we don't know, is there waffle in the recognition? Has it been, like, you know, spun out to make it longer? Is there irrelevant points? Is there duplication from previous recognitions? And it's really difficult because we don't know that. So by a rule of thumb, in a kind of run-of-the-mill PI aspect case, I do kind of look at what the although your disproportionality isn't really taken into account and it's more reasonableness, I do tend to look at what the case was raised at and what the case settles at, to give me an indication of, you know, A, how complex this was, and B, what exactly, you know, what would the auditor think as well. So I do, for an initial recognition, for example, in a kind of run-of-the-mill aspect case, I would be looking at restricting 6 sheets, maybe depending on what the case is. I would maybe go up to 12 sheets pre-litigation, so 12 sheets in total prior to the raising of the action. But for a lower value case, I would probably be looking at maybe 6 to 8 sheets prior to the raising of the action. So I kind of look at what recognitions have been taken before the action's raised, and then obviously there'll be a recognition around defences, and then potentially recognitions after reports, which also restrict. So it just depends, you know, each case stands on its own merits, and it very much is taking a view. But that is my kind of rule of thumb. I very rarely do I ever allow more than 4 sheets for a services recognition. A lot of time you look at an account as well, and there's maybe 20 sheets for services for a, you know, for the care, and the head of claim in the statement of valuation of claim for services is like £500, and their recognition is like 3 times that amount. So yeah, I think that I use that as an argument sometimes as well.
Has your experience, I mean, obviously you are way more experienced at running taxations than anybody else here today. Has your experience shown that the auditor will actually look at the content of a recognition and, as you say, cut out the waffle if there is waffle there? Because I think that might be a useful line for us to say is, we believe, you know, we'll find a way of saying it professionally, but we believe there's a lot of waffle in here, and we understand that the auditor will you know, cut that out at taxation. So that's our point.
Yeah, absolutely. The auditor will look at the at duplication. He'll look at the, you know, how concise the recognition is. So yeah, absolutely, he'll look at that. And yeah, I do think that there will be success there. It's just you have to balance it, whether it's worth, you know, it's like picking your fights. You have to balance it off whether it's actually worth taking the point to taxation. Sometimes it is, and when it's that's why I'm saying, you know, if you are going to taxation anyway, take the recognition point and just put in an objection and ask the auditor to consider them all.
Like any negotiation, it's who's going to blink first. So you just want to have enough ammo to have a go at it. So absolutely, great. That's excellent. Thanks for that.
No bother. Moving on to point 2, difficult to get anything off experts' outlays. This is the previous Court of Session auditor. We struggled to get anything off. This Court of Session auditor, we struggled to get anything off. The same with Sheriff Court auditors. They are not keen to mess with experts' outlays and their charges. However, I did recently take an account to taxation where there's a detailed invoice received from the expert, and it showed multiple peer reviews. It was a liability expert and extensive travel. He was instructed from England, and but the firm whereby he was instructed just so happened to have a Scottish office and also an expert in that field, based in Scotland. So my argument was, well, why did you choose the English expert, not the Scottish one, when there was one here? For the site visit, could the Scottish expert not have attended the site visit to save on travel costs? So there's that's currently at taxation. Well, it's currently with the auditor, so I'm waiting on a response to that, so should have more intel on what his view is on that as well. But in the past, it is really difficult to get anything off the experts' outlays. Point 3, site visits by pursuers agents alongside experts being allowed. The auditor has allowed this in one of my previous taxed accounts, and I have one outstanding as well that I'm awaiting the taxation outcome. So we'll see where he's at, but I still abate it in the first instance, and I say that I don't think it's reasonable for the expert to attend a site visit as well as the pursuers agent. I'm not sure, maybe some instances it is reasonable, but that's a general position I take in negotiations. And finally, point 4 in council's fees being restricted when overstated. I do feel that the auditors are open to restricting council's fees, especially when they are ridiculously high or even a wee bit high. I do feel that they are quite good at restricting. Probably this auditor actually is better than the last auditor. I think I've had more success with him when it comes to council's fees. But again, it's a judgment call based on each case. There was I know of recent taxations against Craig Allardyce's fees. I don't know if you've had any accounts where Thompsons have instructed Craig Allardyce and his fees have just been ridiculous. And he actually had 5 taxations in one day, where I think Mr. Allardyce attended each one of them. All different law accountants that appeared challenging his fees. So yeah, definitely something to think about, but it is something that the auditor is willing to look at. Additional fees, what we're seeing, pursuers going in high, ultimately agreeing in line with the Inner House guidance that was issued previously on a 10 to 15% head. So that's good news, because that's reduced dramatically from the previous 25% plus a head. Or per head. So yeah, they're coming in far too high though, but managing to get them down significantly, as I say, further down in some cases, and in other cases I've managed to have them, they've dropped the additional fee altogether, and that's mainly been with Alec Quinn and Partners, and I believe that a lot of the time they're just chancing their luck, to be honest. And I think sometimes it's coming from the law accountant, not necessarily from the pursuer's agent. So something to think about. They are requesting detailed responses from the defender to their written submissions. So I won't enter into negotiations. I always just go back and say it doesn't warrant an additional fee in the first instance, in most cases, unless it's blatantly obvious that it does. But I always ask for written submissions to enable us to consider the position further. And I've noticed that they're now coming back saying, yeah, well, we want a detailed response from the defender, which I've not actually gave them yet, but it is something that we're starting to see more and more. Dealing with the additional fee before commencing negotiations, this seems to be something previously a lot of my clients were quite keen to get a global deal done. So rather than focusing on the percentages and the additional fee, we just went in factoring in an uplift where it was warranted into the overall negotiations. And I'm seeing more and more of the law accountants I deal with and purchasers agents looking for the additional fee before commencing negotiations. So it's just a wee change in tactics there. But again, I don't really have a view on that. I think agreeing an additional fee before can make negotiations, I'd say, more straightforward. But I don't like sometimes committing to a particular percentage either. So swings and roundabouts. And moving on to the next slide, we're looking at what we're seeing in negotiations. So we are seeing interim payments of expenses sought by Thompsons. Don't know if you've had any, but where we've said, we can't agree this, we're going to go to taxation, or it looks like it's going to proceed down the road to taxation. They've been seeking interim payments on expenses. I believe that there's been 3 separate sheriffs that have refused their motion. They've actually lodged motions for interim expenses, and that's really based on the fact that there were no special reasons. The reasons they're moving for interim payments of expenses is because of the delay in the taxed accounts coming back, or the length of time it's taken to tax an account. So yeah, but in the authority of Robert Kidd against Paul Williamson and another, that was really your authority on interim payments, and that there were special reasons that were relied upon in granting same, and the court, I believe, refused a motion on that grounds that there was no special reasons. So if you are getting threatened of that, then it's something to bear in mind. Threats of seeking interest, if the account's taxed, again, interest on taxed accounts, they can move for interest 28 days after the account's been lodged for taxation. Digby, Brown, Hamilton's routinely seeking this, and it's mainly, again, due to the length of time it's taken for taxations. I believe that the court has so far not been minded to allow this, as the delay in taxation proceeding is really due to the auditor's backlog, and it's not caused by the defender. So that's been their position up till now, but I think with the delays, I'm not sure if you're going to see more and more.
Deborah, sorry to interject again. I actually just attended the practice user group in the personal injury court yesterday, where interest on accounts and the issue of the delays in taxation was discussed. And I don't think we've got anything absolutely rock solid from the court, but I think there was a general reminder from the sheriffs that they don't particularly want to see motions in respect of expenses issues unless absolutely necessary. And when considering those motions, I think the phrase that was used was it would need to be something out of the ordinary before they would consider making an award of interest. So I think that probably links in with the previous authority in relation to interim payments, that really there has to be something fairly unusual or exceptional rather than just a simple delay before the courts will consider that. But they did underline the fact that it is available as an option to make a motion for these, but clearly we aren't encouraging it in general cases.
Well, that's good to know, because I do feel it's used as a threat when you're negotiating, rather than going down the route of actually taxing the account, because there's the risk of them moving for interest after the account's taxed, and if it is based solely on the fact that of the auditor's delay, then that's good to know. And finally, over reliance on counsel, solicitor, advocates. Seen this in Thompson's accounts, where they are charging solid fees for basically everything, from and it's just run of the mill, straightforward actions, and they've got solicitor advocates instructed to do a lot of the work that I would deem reasonable for the principal agent to undertake. So I've been challenging quite a lot. I actually have one with the auditor as well, that I've taken to taxation on this point too. So again, it might be next year before I get the result back for that, but it's there and it's out there, and it's objections I've taken. And I actually negotiated an account last week against, well, it was a Thompson's account, and I managed to negotiate 50% off the account, and that was partly due to the fact that they had expenses up to the date of tender and included expenses after the date of tender, but also they had significant fees in for their solid, for, I think there was a Quox argument that went to a hearing, and there was also some advice given by the solid at some point, which was charged at about £2,000, and it was conceded, and I think it was, all in all, I got about £9,000 off the outlays alone, which is not a normal occurrence, but in this case they actually conceded it before we even went down the road or even mentioned taxation. So that was a good result. So it's something also to keep in mind. And that's me. So thanks very much for your time. As I'm conscious of what the time is, actually, I've probably talked too long, but if anybody has any questions, then feel free to ask.
Thanks very much, Deborah. That's wonderful. You sound like you've certainly got a lot on, very comprehensive examples as well. I just had one brief query. You may have covered some of this, and there's no questions in the Q&A, I should say, but it may be covered by some of the other comments you were saying about the auditor. He seems to be quite active, and he will interrogate the precognitions and things like that. I just wondered, in terms of the deadlines that you went back to on your chart, how lenient or otherwise is he for everybody following those dates or filing their objections in time? Because as you were saying, it's sort of two sides to a coin. You know, the objections have to go in earlier now, but that might promote a settlement. But I just wondered if there was any sort of if there's any direction of travel in that. Yeah, there is actually. I find that the Court of Session auditor that we have at the moment is far more lenient than what the previous auditor was. I think that he is. Well, I've had a few occasions where he's happily allowed objections to be received late. He's continued diet of taxations when the opponent hasn't appeared, and has set a future date, much to my frustration. And I'm feeling the same from the Sheriff Court auditors as well. If it's a party litigant, then guaranteed they're going to continue that. But sometimes this isn't party litigants. This is pursuers agents sometimes that have just missed the deadline. And I've seen it where it's been, you know, not just slightly missed, but significantly missed. So I do sometimes wonder why the rules are in place when it seems to be quite easy to get round them. But a lot of the time it's, you know, if it has been an administrative oversight or whatever, he's going to allow the points, or he's going to allow you know, or continue a taxation. So yeah, I found that auditors in general are far more lenient now than before. So yeah. Well, thanks very much. Yeah, that's very helpful. We've got one more question on the Q&A bar from Claire White. She's saying, we do seem to be seeing counsel attending taxations to justify their own fees more often nowadays. And you mentioned this in relation to a particular advocate. In your experience, do you think that them attending affects the auditor's decisions? You know, are they impressed or you know, or otherwise? I don't think it does. I think that when they attend, they can sometimes shoot themselves in the foot by giving maybe a wee bit too much information, and I don't think the auditor, I don't think it impresses him. I don't think he's either up nor down, to be honest. I don't think it makes any difference by counsel attending. I think that if it's maybe a large case and there is a lot of objections to counsel's involvement. I remember when I was training years ago being at a taxation where counsel was there and I was taking notes, and it was quite a contentious argument, and I think it was over the date of tender, and it was counsel was there, and it was senior counsel, and he argued his point. But I don't think that the previous auditor was either up nor down or swayed by it, and I haven't seen the current auditor, and I have had taxations where counsel's been present either, so I've not seen him been swayed by that either. So yeah, hope that answers your question, Claire. Thank you. I've got one more sort of personal frustration, I suppose, to do with well, the example would be litigation is raised and then an early tender is put in, and immediately you get fed the statement of valuation of claim adjustments that say nothing, and a sort of inventory with something that you've already seen, and all of those go to join in the account before the tender is accepted. Of course, we can't we can't complain that they've taken a long time to accept the tender, you know, nothing like that. And is there any argument about sort of early compliance with the timetable? It seems to be.
Yeah, so basically it looks like cost building. It looks like suddenly there's a tender and it's probably likely it's going to be accepted. So let's just try and get everything else in that we can before we accept it. Absolutely. So I've not actually taken that point, but I have seen it in numerous accounts, and I'm quite sure you're familiar with the response you get back, and that there is no rule in terms of how early you lodge these. And they also argue the point that, well, lodging our valuation early means that we can look to settle the case early and all the rest of it. I've seen it all. I've not actually taken the point to taxation, and I don't know anybody else that has. But it is definitely one that I would probably, if I was taking an account to taxation and I was seeing that in the account, it's definitely an objection I would put in my points and get the view of the auditor on, because I see it happening quite regularly now. Obviously I try and restrict them. Another thing just to check on some accounts is the statement of valuation in scenarios like that. When the valuation they're lodging, just check that the valuation is actually a fresh valuation and it's not the one that they've drafted pre-litigation, because and they've used pre-litigation. We've had I've objected to quite a number of valuation points on the basis that the valuation was the valuation pre-litigation. It wasn't prepared following the raising of the action, and that it's not reasonable. So that's just a point to think about as well, or just check in cases where you see this happening.
That's very helpful. Thanks very much.
Yeah.
Has anybody else got any other questions they wish to raise just now? that's probably reached the end there. It's about 45 minutes or so or more. Stephen,
one tiny final point, if you don't mind, Tim. Deborah, I just wondered, there has been some minor, I think, chat on the rules side of things about tenders in respect of expenses back in the day, and it's never really come to anything. I'm just checking that you're not aware of any other discussions that may be ongoing in the background about developing something there where a defender can effectively put an offer on the table and sort of call the bluff of those negotiating.
No, I'm not aware of anything in the pipeline or any discussions. I know that it's something that comes up quite a lot in terms of why can we not, but ultimately I think I know previously the auditors said it wasn't competent. And
it would need a rule change.
There would need to be a rule change, but I'm not aware of this being in the pipeline or there being any kind of progression on that front. So no.
Super. Thanks so much.
Okay. Well, as I said, my email address is there. So if anybody's got any other questions, feel free to contact me anyway.
Well, thanks very much, Debbie. Well, and thank you everybody for attending, and thanks again to Debbie for her valuable inputs. And just remains for me to say goodbye and good afternoon to you all, and we'll see you next time.
Thank you. Bye.